Good morning, Adam.
Hello there.
There you are.
All right.
How's it going, buddy?
Pretty good. Pretty good.
All
I'm doing
right.
video today or no video? I'm in the dark here.
Yeah. Okay. Yeah. Go do some videos. Help your modeling career. All right. And I'll share my screen, Adam. So let's see here. That should be it. So no Twitter. Metal's on fire, Adam.
Yeah, gold's having a real run. That looks good.
Okay. So for some reason, they're not letting you share the screen.
That's all right. That's all right, Dale. We're just talking anyway here.
All right. All right. Okay. So you were talking about it, now you can, Ed. Want to show you?
Sorry, I was talking about what?
You were talking about the gold last time we were in touch with each other, and said that February was a seasonally strong month for gold, and you've been bullish oil forever, and wondering what you're thinking here. I saw your tweet. I believe it was this weekend that we would be talking about trading in a war.
I was asking about that, whether it would be.
So do you think they're going in?
Yeah, I mean, listen, I think at this point what's interesting to me is the U.S. is still banging on this. Just, in the last half hour, the U.S. envoy to the UN said they believed an invasion was imminent. And, we're not seeing the market move on that anymore. So we're at the point now where until it happens, the market's skeptical. I think there's a bit of a crying wolf going on here. Now, we saw overnight, a bit of the shelling that was going on. And I think people initially mistook that for the Russian military rolling in and then gave it all back. So the jitters are really there. But I think this time we're at the point where we need to see the confirmation. That said, a lot of these moves took off overnight and then gave it back, but gold has held out. We ran the stops above 1880, haven't given a cent back. We're right at the highs here today. And, it's impressive. That's an impressive move in gold. Because, there's not, look at that chart. I think that is really it. The inflation side, you can argue both ways of it, that the central banks have lost control of inflation. Governments may have lost control of spending. Fair enough. You could kind of go both ways on that. You have yields moving up, so you have some competition there. But I would argue that you wouldn't want to own bonds right now because of the potential for capital losses. So, gold
even after a break like this, Adam. I'm looking at, I'll use TLT for a proxy. Okay, so we are close to the lows that we had in this last year, and it doesn't look bullish, but we are starting to get some bullish divergences, and maybe we're still going to have a risk-off event somewhere.
Yeah, that's fair enough. Italian bonds at the start of the week were down, I think, 9 basis points. So it was, we're kind of taking this pause here right around 2%, 10, since you have that up there.
Yeah.
And that's fair. I don't know if that tells us much, given the size of the move we've seen since the start of the year. But then again, I don't know if it tells us much about gold either.
Do you trade ruble?
Listen, I think it's an unbelievably asymmetric trade if there is no war.
Yeah.
Because you have oil. Russia's the number one oil exporter in the world. And
who's number two?
Saudi Arabia.
No, we are. Yeah, we are.
Yeah, I know. U.S. is the number one producer in the world, but the U.S. uses so much of its own oil that it doesn't have as much to export, whereas Russia does.
Yeah, we're just greedy, gas guzzling nation.
We're a lot of gasoline,
a lot of air conditioning and heat, and
but so the ruble's obviously been crushed. But if they demobilize, I wouldn't necessarily say it's asymmetrical at this point. But if you believe that they aren't going to attack, that will take some of the life out of gold, or pardon me, oil. Fair enough.
Yeah.
But the ruble would be, all else equal, the ruble could be much higher than it is right now.
Yeah, and you know what? This was Monday, so I mean, lower high, didn't attack the high. This was in January.
It hasn't even come
So,
close to that, really.
yeah, that's what I mean. So it's showing some resilience, and then they're trying to pop it again today, and they're leaving a little wick, and a lot of people are pointing towards a Russian market that maybe they had to, maybe that's why they moved troops to the border. But the Russian market, I mean, they're cracking moving averages and everything. A lot of people like Russia right here.
If you were to dive in, I'm sure there are names in that stock market that are trading this stupidly cheap, presuming there's no war and they don't get sanctioned.
Well,
you trade that.
When you look at the weekly in Russia, it's almost like it didn't bottom until he had 130,000 troops at the border.
Yeah, wow. I mean, I guess
weird.
It's trying to tell you that there won't be war, and maybe it's trying to tell you that anyway. And if you want to, and you can spin that over to any stock exchange really in the world. And if it all dies down, I mean, a leveraged trade on S&P futures, will get you the same directional move. If that appears to be the case. Now, I agree with what you're saying, because you don't need to leverage up necessarily, but that seems to be which way the wind is blowing. I think reading between the lines on Biden's big speech the other day, he did say we don't have plans to go NATO into Ukraine. Those are the kind of things that you try to settle on. Russia obviously wanted a hard commitment of no NATO in Ukraine.
Yeah.
Instead, they put on the table, well, here's a soft commitment. And then Russia says, and Russia has to decide whether that's. And
we're sending our troops these pierogies in Poland.
Yeah. Well, I mean, and that could be it too, right?
Ever have one, Adam? Come on, you could admit it.
I'm from Central Canada, man. We have pierogies. I have pierogies here once a month.
All right. It's good to carve up on them once in a while before you trade. Just giving you a little trading tip. So
my mother's name is Zaretsky, which is a Ukrainian name. So.
Oh, Ukrainian, yeah. So pierogies, they cross the border from Poland. So, I'm looking at, was talking about Brazil a few weeks ago, when the dollar looked like it might be getting ready to turn, and wow, what a performance in Brazil. So, I'm thinking Russia, and then I look at Brazil, and then even, emerging markets look like they're trying to bottom here. And someone I follow is looking for new highs in DAX. It seems like there's money flows leaving U.S. markets going to international markets. Am I reading my charts correctly here?
Great report I read on that last week or 2 weeks ago, and I dig it up and I'll post it on Forex Live if anyone's looking for it. And it's the theme I've talked with you about before, and it's really compelling on the equity flows side. So much money is stashed in US dollars, but the companies out there, they're tremendously cheap in emerging markets. And, you look at somebody like Brazil, it's important to differentiate, I think, in emerging markets. Brazil is a commodity exporter,
right?
Whereas someone like Turkey, India is a gigantic commodity importer. So we get that commodity bull market that I believe we're in. You have that divergence in emerging markets. So it's be careful about picking your winners. Not that I dislike India, though I'm certainly not investing in Turkey. But
okay. So you want to go to countries that are natural resource based, agricultural based, exporters, not importers. And who's the number one importer of everything?
United States of America.
I thought it was China.
Wow, maybe it works its way through China. Sure. Okay.
So anyway, I'm thinking that people are bullish China right now. They've had a little bit of a rift. I kind of sound like an international stock analyst, but it's the first time in a while I started looking at things outside of the S&P and Dow and NASDAQ, and there is a whole other world out there. And if we're going to have a turn in the dollar, that may be where the money's going.
And it's tech too, right? If you're not bullish tech, I mean, you strip that out of the US market, there's, it's a whole different market altogether. And it's it's just more highly valued than a lot of similar foreign markets. So you assume those dollars will flow in that direction. And that tech really represents all the outperformance of the U.S. market by and large over a number of years. So if tech flattens out, not that Apple or Microsoft, but at least smaller cap tech, or the multiples come down, and people start looking for the value trade, then it's certainly not in the U.S., although pockets in the U.S. as well. But I just think those dollars will flow, and it's a compelling case for Latin American currencies, a lot of big commodity exporters there, commodity currencies in general, and there's a lot to like in the metals. Copper, I think people are catching on to the story of copper, nickel, even tin.
Are they making new highs, or are they underperforming gold?
They're not making new highs. They're holding up though, and they're they made new highs at earlier last year when gold was just sort of chopping. Although gold did make new highs, but didn't really do anything too impressive compared to some of these other commodities. And fundamentally, there's a lot there to like on the green transition side. There's going to be a lot of building.
I even saw on Twitter there's a whole column devoted to people who trade copper. So that you wouldn't have seen that 2-3 years ago.
Yeah, the fundamentals are there. I mean, the mines are cheap, and there's lots to like.
So what about euro? Above 115 first, or one more shot down, Adam? What do you think?
I just can't get behind the euro anymore. I mean, they're coming. I mean, Italy, you look at Italy right now, and it looks like it's headed for another sovereign crisis. Lagarde comes out last month and says, we're not worried about spreads. Well, then spreads blow out again, right? Between Italy and Germany. So that the amount, for people who don't know, the amount that Italy pays to borrow compared to Germany. Of course, they're borrowing in the same currency. And the crisis in Europe a decade ago was all about, nobody wanted to lend to Italy, Spain, Portugal, Greece. And I just don't see how that can improve. The economies are so poor in the periphery. And Germany's trying to drive rates up. But even there, the economy's not so hot. And so I just don't think there's an investable theme in Europe. I mean, there is value, like I said, in their equity market, but it's middling. And it's just banks, right? Which is the last place you want to be in a sovereign crisis. So, technically, I think there's probably a trade there. It's coiling up, there's a massive amount of coins. I mean, that's unbelievable looking at that chart that maybe looks like to me like it's consolidating even more. And that's sort of 125 to whatever the bottom of that range is, 108.
Yeah, and 106. Yeah, so that's a 17-cent range. Over 23 would take it to 140. But there's confluence on this monthly. I could call it a monthly line, a weekly line, and then you have this line off these two lows, and perhaps a third drive down here.
I mean, and within that, the question is inflation, right? It's sort of the global question of, okay, where's inflation and what's the neutral rate? So, Europe, Lagarde has kind of fought it back now and said, we think it's transitory. And that ultimately means maybe they only get to, as a terminal rate, say they're negative 50 right now, basis points. Maybe they get to plus 25, plus 50, probably more like plus 10. Whereas in the United States, Canada, Australia, just showing there, you could easily get to 2, 3, maybe even 4% on the overnight rate. And so that divergence could widen, right? Even though it's, the divergence is still there, but there's real scope for that widening. So right now we're looking at Europe and saying, well, they could get out of negative rates, and fair enough.
They could fall back into them too.
Well, that's right, and I just don't see that scope on the upside for tolerating. When you have employment being what it is in the periphery, rates at at much higher levels.
Would it be unusual, Adam? Because I know a lot of people and people that I follow, had like a 201 to 210, max 220 for a 10-year target, and that's when they were like 113 and 130. And now that we're here and we're waiting for the first interest rate increase from the Fed, that the high in yields are already, the market already did it.
It's that transitory call. And obviously that everybody's calling for something higher right now. But we've seen that over and over.
When they do it, is that going to make the yields go to, 10-year go to 230 because they hike in mid-March?
You really have to start pricing in almost an inversion. And what I do wonder about though is, well, let's wait and see when the Fed's out of the market. They've had their thumb on the scale of bonds for years, 2 years.
Yeah.
And, let's get them, if they can get out of the bond market, then let's see what happens, first of all, which is imminent. And then secondly, maybe they start dabbling in the curve, right? If they start talking about quantitative tightening and they sell off the long end and create some curve steepness and start basically doing yield curve control on the fly, then it's hard to say, because then they're back in the market. And I think that's a real risk, that they want to unload some of those holdings and push up the long end. So, but I'm also sympathetic to the idea that, okay, the bottlenecks ease. energy, maybe commodities flatten out. Used cars prices, whatever it is that's been driving a lot of the CPI higher. There's a compelling argument. There's a lot of one-offs there, and they don't have to go back down. Remember, you just have to level off inflation. So,
right.
If we end the year sort of 3% inflation, then the hysteria about inflation dies down, and you look back to growth. Maybe it's not so hot coming out of all the rebalancing. The pent up savings end up getting spent. And what does 2023, 2024 growth outlook look like? Is it 3.5% or is it 2%? Probably have a divided Congress in that, so you can kiss economic stimulus goodbye.
Oh yeah.
And then maybe you end up pricing in a top terminal rate of 1.5, and the dollar would have to come back down.
I always like to rap with you with your home country and the currency of your home country, the loonie. And to me, this still smacks of consolidation. Really, it didn't get much weaker while crude was blowing off, and it seems to be holding this, 2640 level. Do you think we're going to get a breakout over 128 that's going to take it into the 130 handle area?
I'll say two things. I'm constructive on commodities, like I said, and oil, CAD probably does need to play catch up to oil.
The whole cosmos is now,
Is that right? I hate to be banging on the drum that everyone else is hitting. At least it was early.
We're all getting tired. We, anyone who would say deflation right now would get a lot of hate mail. But yeah, so tell us the two things about loonie.
But I think that's number one, and I think that's a real tailwind right now for the Canadian. The Bank of Canada is going to step on the gas. They said there's a word aggressive. We might be aggressive, or we might be. There was like almost a code word that Lane, a BOC deputy, used yesterday. That might have been a hint at 50 basis points, and I sort of watch out for that. Like, we're prepared to be aggressive if necessary. What does aggressive mean? I don't think aggressive means a 25 basis point hike every meeting. It means maybe more. So that'd be the real surprise if the Bank of Canada went 50. And they're not afraid of surprises. Like the Fed, I think, really likes to tee it up, where the Bank of Canada, they don't mind.
They use a 3-wood on the fairway.
That's just like
teeing it up.
Just get it over the water.
Hey, you know what? You could even putt with it. So, we kind of have a policy about not getting political, but I have to ask you about this convoy and the Canadian government's emergency action that they could freeze people's accounts that support them. How did you feel about that as a Canadian when that happened?
I don't really like to get into that. I don't think it's not going to help anybody make money.
All right.
And I don't think it's a factor for the Canadian dollar. We're out here. It isn't. If I get tied up in that kind of, And it
Yeah.
pollutes my Twitter feed. I wish I could just mute it all, and there's plenty to focus on in the world. So,
Okay.
I mean, everybody, just wish everyone would go to work. And
Yeah, I do too.
Same as
Yeah,
that. So,
wish we could have a time machine. So,
but that's sort of the thing. A big point I want to make on Canada is housing. It's out of control.
Yeah.
Last month, house price, like the average Canadian who owns a house, made $20,000 on their house.
Yeah.
And this has gone on now for an unbelievable amount of time.
It's
the average house it's well over $800,000 here in like way outside of Toronto or Vancouver or Montreal or anywhere else, that you would see people moving to.
Mm-hmm.
It's at the time, I think you're at the blow off top kind of phase where it goes parabolic at the end. Now,
what do you think would pop it? Is it going to be rates? Is it going to be rates leading to a recession that central banks are making a policy mistake here?
I mean, it could be that. I think it will be that. Everybody's so leveraged up. I think it could be just buyers saying enough, and just dropping out. These things end in a lot of different ways and for a lot of different reasons. And there's a real scope that this blows up and you get a 20% decline. And I read a bank note the other day in Canada. Oh, a 20% decline would be no big deal. It's all kind of found money anyway. But those things, when you get a 20% decline, can tend to turn into something really ugly very quickly, as whatever's exposed in the system that we didn't know was there when the tide starts going out.
Any view on risk on equities here? People don't even talk about it, but as much now that we're correcting, you're not hearing as much from the bears. And but do you have a view? Do we have another rally coming here, or
I believe I think that listen, watch Ukraine. I don't want to predict what's going to happen in Ukraine, but it does seem a little more constructive right now. So if I assume that the war isn't going to happen there, and I also assume that 25 basis points is coming in March, which I'm not 50. And so you get a bounce from that. And I think the Fed's going to make that very clear. They want to be predictable, gradual. Bullard is an outlier, as always.
Yeah.
And, data will come in before then. But even today, Philly Fed, a tad soft. Housing starts a tad soft. And retail sales yesterday was strong, though. Keep in mind, that's much more important. But I think there's a lot. I'd like us, excluding tech, which I just think has gotten a little ahead of itself. There's a lot to like in all global equity markets, assuming that's what the Fed does and assuming there's no war in Ukraine. That's probably at a 5% rally everywhere.
Okay. All right.
And I think that's my base case.
And what do you call it? 50-50 is going in
to Ukraine?
Yeah. Or you think it's 100%, right, Adam? It's just a question of when, not
no. I listen, I think at this point, I don't think it's happening.
Oh, okay.
But, it's just this eastern part that is really interesting. And you saw today there was some shelling, right? And it was the rebels and the Ukrainian government in Luhansk or Donbass.
Yeah.
And, if you think about the rebels there, they've got a bit of an incentive right now to stir things up and draw Russia in if they want to separate and be independent, right? If that's their goal, they're not going to do it on their own. Maybe they do with some Russian backing or Russia declares, but that might be in their interest to stir things up there, and it'd be interesting to see if they're able to do that.
Okay. Can I talk about the Canadian hockey team?
Oh, the men or women? We won the women's gold today.
Yeah. That's why I wanted to bring it up. And
don't bring up the men. We lost to Sweden yesterday.
Yeah. It looks like the U.S. has the best shot, right?
It's quite a rivalry between the women there. So
I think the women hockey is actually better. I mean, they're better passers, and it's amazing.
The progression in that sport has been. I mean, I played as a kid with women, a long time ago now, and there weren't many very good hockey players. Now you see these young women, even in my hometown. Yeah. They can fire the puck like you wouldn't believe.
Yeah,
they can skate, they can fly, and it's it's a wonderful sport. And You know, my daughter, see, 4-year-old daughter, she's playing now. So
Already.
keep an eye out for her, Dale.
That's your retirement plan.
Well, they don't get paid much, but
yeah. I appreciate your time today, Adam. Good luck in these markets this is your kind of market, isn't it? I mean,
headlines.
you know, every headline. So
That's it.
So I hope you find time to sleep, even though things are really jumping with headlines.
I got a call last night as I was going to sleep telling me, oh, they're shooting in Ukraine. So yeah, well, we'll see. All
right, buddy. You're young. You can handle it. All right. Adam Button, everybody.
Thanks
follow
so much.
him follow him on Forex Live. Great news trader. And if you just want to follow his individual Twitter, it's at FX_Button. Thank you, my trading warrior brother. Good luck.
All the best, Dale. Talk to you soon.
All right, buddy. So that's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge. See everyone tomorrow. People that caught this gold breakout or bought the pullback into it, congratulations. I'm jealous. And I'll talk to you tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.